Hey guys, welcome back to the Max Spence Business Podcast. Today I have a very special guest, but before I jump into that, if you guys like the content I'm putting out, please like, subscribe, leave a review. It helps out a ton with the podcast and also the people that are coming on the show. If you can go over to Apple Podcasts and leave a review, that helps out a ton as well. So without further ado, today's guest is Bridger Pennington. So this guy is absolutely incredible. I actually just found out about his content and what he's been doing in the past pretty much day. But yeah, so pretty much he built and launched two funds in his 20s. So his first being a bridge loan fund, where he's gotten a 64% return for his first round of investors, which is absolutely crazy. And he's currently working on a third fund for real estate. This guy is absolutely incredible and amazing. And the great thing about him is he's actually going to teach you how he's actually did it all. So he has a YouTube channel and a podcast. So his podcast is Investment Fund Secrets, and his YouTube is Bridger Pennington. It's great having you on the show, man.
Well, Max, thanks for the kind intro. Geez, you're talking me out quite a bit. So, but yeah, excited to be on the show. It's gonna be fun.
Awesome. So yeah, why don't we jump in for people that maybe don't know who you are? How did you grow up? How did you sort of get this interest in entrepreneurship? Where did you grow up, and how did this fund and all this sort of stuff come about?
Yeah, I grew up. I'm from Salt Lake City, Utah, in the States. I know you're in Ottawa, so in Canada. But I grew up in a very, I would say, middle class, working class family. And my dad, though, not working class, but more entrepreneurial. So he started a number of businesses as I was a kid, and as an entrepreneurial child, you kind of had feast and famine season. My dad was very frugal of a guy, and so. But we always had food on the table, and it was great, not everything, And though, growing up, I had a lot of friends who were very wealthy, though, had very wealthy families, very wealthy, did well off. And I had this just desired goal that I wanted to be wealthy, be a millionaire, and do that thing, right? And I was like, I'll work. I don't care what the work is. I'll do it, right? So I got into college. My first 2 years of college, I started 6 businesses. And that's not like 6 business ideas. That's like 6 businesses that were up and running, making money, cash flow, employees 6 times in 2 years. We did real estate wholesaling. We did Chinese tutoring, Forex. We did website building and all this random stuff. And it was good learning. But anyways, my dad finally grabs me and he's like, Bridger, you're kind of like a chicken with your head cut off, to be honest. He goes, I want you to go meet with one of my business partners. I think he can really help you and kind of teach you about, what you should do. Because I'd made some money, but nothing great. Nothing had really taken off. And so I go and meet with this guy. I pull up through a gated community. I pull up to this huge, gorgeous white house, and it's just massive. And I remember parking my car. I kind of double check the address, who's my dad's business partner? Who is this guy? This guy is just, huge house, cars in the garage, the whole thing, right? Pool in the backyard, wine cellar, the whole decked out house. And I knock on his door. He answers. He invites me in. Hey, we sit down. We start to chat, and we start talking about business and life and all the stuff I'm doing. And I finally get to the point where I ask him, "How did you get all of this?" And I kind of pointed at everything, how did you do this? and he kind of laughs and he goes, Bridger, actually, a lot of people don't ask me that question. I was like, oh shoot, that's the first question I had was how did you do this, right? And he goes, no, I was like, oh, sorry, I asked that. He goes, no, it's fine. Let me tell you. And he goes, in my 20s, I was just like you. I'd started a number of businesses. I actually did pretty well, but then I figured out the secrets of the rich, secrets of the ultra wealthy. I'm like, what do you mean? He goes, this is what the ultra wealthy families of the world do. The Rothschild, the Vanderbilt family. You have the Trump family, Romney family, people like that. They all work in funds. And I'm like, what do you mean fund? And he goes, a fund, private equity, hedge funds, real estate funds, family office funds, that's what they do. And they will get their kids to go to the best colleges, and they work at hedge funds and private equity. And they either come back and run their own family office, or they go run another fund, and that's what they do. And so he goes, about 10 years ago, I learned what a fund was, how it worked, how it functioned. And I set a goal. I said, I don't care how long it takes. I don't care if it's 1 year or 5 years or 20 years. I'm going to figure out what a fund is and how to run one, because everyone that I knew that was ultra wealthy ran funds. And so he goes, that's exactly what we did. He goes, me and your dad started a fund about, at the time it was 6 years earlier. And they had, at the time, they were managing $8 billion with a B, $billion of real estate inside of their fund. So to put that in perspective, like Cardone Capital, right? They're at like 1.1 billion, Grant Cardone, and Grant Cardone's great, nothing against him. At the time, these guys are 8 billion in multifamily real estate. Now today, they're all the way up to like 25 billion, something like that. It's crazy what they've been able to do. And so I was very intrigued. I saw, what was going on, how much money they can make. And I asked them like, hey, can you be my mentor? Because I've always heard, I'm sure you talk about this show, like find mentors, right? Like mentors is the way to like go from point A to point B faster. And so he kind of laughs. He goes, Bridger, you should go ask your dad. Your dad's way better than I am in this. I'm like, no. My dad's poor. Like we live in like a normal house. He drives a crappy car. Like you're rich. Like that you should teach me. He goes, Bridger, me and your dad make about the same amount of money. And my like jaw like almost dropped to the floor. I was like, what? Like, and I left his house and said, thanks. I drove straight to my dad's house and I was like, Dad, what the heck? Like, what's going on? Like, are you like, you actually are making this much money? And he kind of laughs, goes, well, yeah, we got these funds that are doing well. And I'm like, why haven't I been able to like order like a soda at dinner the last like 6 years because it's too expensive, And anyways, he kind of laughs and all this stuff. But long story short is he sat down and started teaching me about funds. We pulled up a whiteboard and he started teaching me how funds worked, how the SEC worked, how regulation worked, how to find investors. And long story short, in the next year after me learning about that, I found a great opportunity to actually launch a fund. I had this great idea. We're going to do these short-term loans and lending to these entrepreneurial businesses. And I thought it was a great idea. I showed it to my dad. He loved the idea. We mapped it all together. We got it all put together. And I overlooked this for whatever reason, but the one thing you need for a fund is money, is investors. That's like the basics of a fund is investors. And so I was like, shoot, how am I gonna raise money? I'm 22 years old. I don't have a college degree. I'm like halfway through college. How am I gonna do this? And I thought, well, my dad is perfect. My dad is rich. He doesn't spend his money. He likes my idea. I'm his son. He'll definitely invest in my fund. And so it was a late Sunday night. I remember I walked in my dad's office and I was gonna pitch him on my fund, like to put in some money. And I in my best pitch voice possible, I asked my dad, like, hey, how would you like to be our first investor into the fund? And my dad said, Bridger, if I invest in your fund, I would ruin the experience of you going and raising money on your own. That's a crutch that you'll never be able to recover from. If your first investor is your hardest investor, and if I give you money, it'll be a crutch that you'll never be able to recover from. And he said no. And he kicked me out and he said, go do this on your own. And to date, that was like 4 years ago, my dad has never invested in any deal, any project, anything I've ever taken him. And I take him a lot of stuff. I'm always like, Dad, like try this one. Never, it's always zero. But what he's done for me is he's taught me all the principles and values behind how I can do it, which I really respect him for. So I went out, I raised a whopping $49,000 from 6 investors after like 4 or 5 weeks. I talked to everybody I knew, right? And it was a teeny fund, $49,000, but it was enough to get started. We were doing these small micro loans. They were about $5 to $6, $7 grand a piece. And on our first fund, we made back a 64% return to our investors. Our investors were ecstatic. They loved it. And then since then, we launched our second fund. We've deployed and raised millions of dollars in that fund. And then now we're launching our third fund, a real estate fund, a value add real estate fund. And we've got, I can't spell the beans on that fund. We've got a lot of money lined up for that fund. It's pretty awesome. Maybe in 6 months, I can tell you all the details of it. But it's been pretty fun. And it's been awesome to do that and just take off. It's been amazing. So and then additionally, myself and my brother, he works at an $800 million fund, securities attorney, chief compliance officer. My dad and myself, we've got a pretty good knowledge on funds. So we've had a lot of people ask us, how do funds work? How do they run? How do I set one up? And so we decided to start a podcast, online program, like you mentioned at the beginning, YouTube videos, stuff like that, to help just teach people and train people on funds, because no one talks about this stuff. It is like this dark corner of the finance world. No one teaches it. No one talks about it. It's like taboo for whatever reason. So we're pulling back the curtain, and it's actually not that hard. Yeah, it takes some work, but it's not as hard as you think to actually set up a hedge fund or a private equity fund or a real estate fund. So anyways, that's kind of the background story of what we've done.
Yeah, no, and that's absolutely incredible. And in that, there's a few pieces of information that I sort of want to pull out of that. The first one being is like, as people can probably already tell from listening, is that like having a mentor, which was your dad or your dad's friend, or like going out and having a mentor is crucial to actually having that exponential business growth, which you've had by like you're on your third fund and you're 25 years old, which is like to the majority of people, like people have just gotten out of university, and they're, they've just been at their, first company, or, their whatever, they just started their business, right? And you're on your third fund, which is absolutely crazy. And I don't know, like you'd probably say that having those mentors is a key to actually having that growth so quickly.
I totally agree. And that's, you'll hear that from every entrepreneur you ever talk to. Will say mentors is the reason I got from here to there faster. It's because and that's something I decided from a young age was, I don't care. I'm just going to copy what successful people do. And if they've got a formula, I'm just going to do it, right? I don't care what happens. I'm going to follow the formula. And I've tried to do that as true as possible. And so whenever I hear something from a respected entrepreneur that I like, and we see this too, it's interesting. This kind of is more broad on entrepreneurship, but I joined a program, there's courses and programs and stuff online. I joined one for $15,000 one time. And it was to teach, it was actually to teach how to launch a podcast and online marketing. And that's a lot of stuff. And I was like, hey, I got to learn this, right? And so we went through, and we're actually now one of the most successful students ever to go through this coach. And his name's Steve Larson, incredible guy. If you want to look about how to run funnels and advertise, he's amazing. And we talked to him, we've been on the phone with him and stuff. And we kind of asked him why did we, you have thousands of students, how did we do this? And he goes, what's interesting about you guys do exactly what I say. He goes, it's, and we're like, well, why wouldn't you do that? Like, we paid $15,000. Why wouldn't we just copy the formula? He goes, you'd be surprised. 99% of people that have paid $15,000 to join my program still will not follow the system I give them. You got to do a webinar every week. You got to start publishing. You got to do it this way. He tells them the exact formula, and people just don't follow it. I think that's true in almost everything in life. I did actually a live yesterday on my Instagram about this. There's a few people that have asked me to coach them and mentor them their personal friends and family and stuff. And I teach them for an hour on a whiteboard, and then I give them a homework assignment to read a book. Okay, here's a book. It's a small book, but you got to read it. This is like the blueprint. You need this book to do what you want to do. And they won't read the book. Hey, you got to watch this 15-minute YouTube video. This will walk you through exactly what it is. They won't watch the YouTube video. And it's interesting is most people want a magic pill. They want just like, hey, I take a vaccine, right? That's a great example. I take a vaccine or I take a pill, and then all my problems go away. I have money and I have everything forever. And it really comes down to the whole basis of everything is, and especially entrepreneurship, is just following the process, the system. And so mentors, they'll lay out the system for you. You just got to go do it. So I'm getting off on a ramble here, but I think something that's crucial for success in whatever you're doing.
No, 100%. And that's what I love. Yeah. Like jumping into more detail about that. Like that's really important, is to be coachable when you have those mentors, right? Is being able to follow what they're putting down and actually just doing the work, because, like probably the majority of people have figured out all the information out there to be successful is literally on the internet. You can Google a fund, and once you understand, like, hey, to make some incredible amount of money, you want to start a fund. And then you go on to Google and you type, how do I start a fund? And you'll get like 20 million, like pretty much answers to that question, right? And it just takes time to, sit down and actually go through it. So what do you think is actually what stops people from actually doing that? I watched one of your YouTube videos today, and it was breaking down like how you start a fund is, you go find the deal and, blah, 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 blah. You move on from there, right? But what actually stops people from just going out and, either finding that deal, open up their laptop and just doing it, getting in their car and maybe driving around their town for a real estate deal? What do you think actually stops people from doing that? Is it like a fear? Like in your personal experience, what have you sort of seen?
Yeah, it's a good question. I think it's probably different for everybody. There's probably a million excuses and reasons not to do it. I'll tell you the reason though to do it. And this is what happened to me. And I love, I don't know if you watch, listen to Tony Robbins at all. I love Tony Robbins. He talks about this too. He goes, there's a moment in people's lives because people want to do stuff. I want to be rich. I want to be, I want to be fit and stuff, but those wants really don't really happen. And sometimes there's a spurt of 2 days of energy and that kind of goes away. He goes, what happens eventually though, people are trying to quit smoking or get physically fit or start that business, is they wake up one day and they just go, I've had enough. I'm done. Like it's a breaking point of just like, I'm sick of this. No more is what happens. And that happened with me with these businesses. I started 6 businesses my first 2 years of college, and they made money. I was making $1,000 or $2,000 a month in college. But I finally woke up one day and I was like, what am I doing this for? Like, I just had this, I remember having actually multiple days like that. Like, I'm done. Like, I don't care. It's not about posting on Instagram. It's not about telling my friends, like, just for me, I'm going to have a business that hits $1 million I don't care if it takes a year or 5 years, whatever, I'm doing it. And that's how I'm going to structure my business. And I think that's what it takes for people. And then what happens is everything else falls in place, and you can find the content, you'll figure out the problems, you'll find the partners to team up with. And when you start moving, that's the biggest thing too, is when you start moving, when you start the podcast, when you start a business, what happens is all the people around you kind of in your circle start to notice, oh, like Max is starting to, like, that's kind of cool. He started a podcast, or you got a business going. Oh, cool. I wonder what he's doing. They'll see you over time. And then what happens is when any of those people want to start a business or have a friend, they go, oh, talk to Max or talk to Bridger. Those guys are starting. And what it does is it just creates momentum because you're moving. Very few people start moving and start just doing stuff. You're going to strike out a few times, but keep swinging the bat, And so that's what I would say for anybody. And that's just business in general, especially a fund, is just start moving, start looking at properties, whether it's, you guys talk about real estate a lot, or start trading crypto, or start finding people around you, just start moving. And it's okay if it takes you 2 years, or heaven forbid it takes you 5 years. Okay. Who cares? It took 5 years, you're a millionaire. Awesome. Right. It's way better than the alternative.
Yeah, no, 100% is, the alternative is, maybe working a $60,000 or $80,000 job. There's nothing wrong with that. But if you're wanting like true freedom in life, that the only way to actually achieve that is with money, or with passive income, for like being able to have enough money to actually live a freedom lifestyle. Right.
Yeah.
So I want to jump back to your 8 businesses that you first started that led up to you actually starting the fund business, and you sort of having that realization. And the reason I want to talk about this is there's probably somebody right now who's listening who's in the exact same position you were, maybe doing 2 businesses or 3 businesses, and they just keep jumping, from business to business. And they're just trying to figure out, something that they like and something that they can make money. But like, how did you sort of navigate that to stop jumping around and just go all in on something? Because I think from my own experience, from like the thing that stops me from going all in on something is like, oh, what if it doesn't work? What if it fails? Like, what if I spend 3 years in it slaving away and then realize, hey, there was actually this alternative route that was so much easier and so much more fun to do. And I just spent 3 years trying to start this random company or something like that. So how did you overcome that to sort of like sit down and just be like, you know what, I've had enough of jumping around from business to business to business. I'm just going to put all my eggs in one basket and just try and do this, get this fund off the ground and start going.
Yeah, it's a good question, a fair question. Those first business, and I was all the stuff you guys are probably looking at. I was looking at drop shipping and all like the biz op stuff online, right? I think it's good though. It was it's almost like you think about dating and then marriage, right? That was my dating phase. I was dating around different business, and what I was dating was business vehicles, I guess. What's the right word for them? A business venture, or business types. And what was nice for me is I dated around all these different business vehicles or types of business I could be in. And when I realized, and I started to actually be intentional about the type of business I wanted to be in after those business tries. Because at the beginning, and for a lot of people, it's like, okay, where's the money? I'm going to go grab the money. And my first business I started was a Chinese tutoring business. I tutor Chinese. I speak Mandarin Chinese very fluently. Hey, I'm going to tutor some kids that do this. And it was like $25 an hour. It was like, sweet. And so I just pop in, I just tutor kids for $25 an hour. It was twice as much as all my friends were making in college. And then I started to scale, and I hired more tutors. I hired like 7 or 8 tutors, and they were teaching kids. I was like, hey, this is great. And then I looked at my numbers, and it was a super low margin business. It was $25 an hour, but I had to pay the teacher like $14 an hour. And then I had like taxes and insurance and all this other stuff. And I was netting every hour like $4, right? And I was like, well, for me to like make $1 million, I have to have like 1,000, 2,000 tutors full time. You know what I mean? I'm like, that is just a headache of a business. And then I went over and I tried real estate wholesaling, other business, and I shopped around and dated around. And then I finally started to look at different business models. And I became very intentional with the type of business I wanted to be. And I wanted a business that would have very low overhead. So high margin, low overhead, very few employees. And it, and I'm not saying it's the right way to do this. This is the way I looked at it. I said, hey, it's easier if I have less employees because it's more systems than people are. So they're hiring and firing, it just becomes too big. And now it's fine to have that big, but at the beginning I said I want a small one. So I looked at a few different business vehicles that were super lucrative. Number one was like a tech software company, right? Those are mega high margins. They have really good residual income and they scale, like you can sell them for 18. And you guys have seen that, right? Tech companies have these huge, and I was like, man, okay, being a tech company would be sick, but I don't know tech. I'm not like a tech guy. So I was like, okay, what else is kind of similar to that? And then I saw funds. And thankfully I had an incredible dad and father and brother. And I saw the vehicle of funds. Funds are the same, it's kind of the same thing as a tech company. You have 8 people that will manage $2 or $3 billion in a fund, and they're splitting those returns between 8 people. The fund vehicle is super lucrative, right? You have small overhead and lots of margin. The final vehicle I looked at too was information products. Information products are super lucrative. They have such high margin. And what it does when you have a high margin business, your opportunity to succeed is way higher because your failure rate is much lower. It's harder to fail in a high margin business. In a restaurant, your margins are always like razor thin, right? So if you don't barely hit your like the certain number of customers or whatever you're making, you're out of business. With an information product or a fund, I mean, your margins are so high that you can even kind of not suck, but be like average and still do really, really well. And so I was very intentional about the businesses we started after that. And I was like, well, I still want to start a software company one day. I'm like, I'm not smart enough to do that, but I know how to do funds. And I started a fund. And so that's where I started. And then now, like a couple of years later, we started an information product to teach people about funds, both very high margin businesses. Makes it a lot easier to scale. So I was intentional about those. And I think it was good. I think it was fine to date. I was happy that I dated around in those businesses. It taught me so much. Dude, my first business, it took me like 100 hours about to set up my bank accounts, to have like a business entity, and to build a website. It probably took me 100 hours to do. Crazy. And it just took me forever. It was really hard. Now I can set up bank accounts in a business and a whole website that functions and works in like maybe an hour and 45 minutes. Like and you just learn stuff and I was like, you know what? I'm not like a Mark Zuckerberg guy that's just going to have the first business that just takes off forever. Like I've just got to learn. I got to get in the game. And the fastest way to learn for me was just doing and just get in the game because you have to learn. You have to figure it out. And so now then you have to read the books. You have to like consume stuff. It makes you work. And so that's what I did. And I've grown tremendously. And I'm still on this growth curve, right? We're launching a new type of fund, a real estate fund. I haven't done that before. I have other people that I have. So I got to go talk to new mentors and bring them on and learn more and more about launching specifically a real estate fund and how that works. And your growth curve just keeps going up and up and up. And for me, it was the fastest way to learn was to just get in the game and start businesses. And now I have, I'm starting to build more and more things in my toolkit, I guess, that I can whip out and pull kind of like Batman's belt kind of a thing. So
no, and that's absolutely amazing. So like, going back, like, did you go to college or university? Like, did you graduate, or when you started these business? Because like usually what I'll see is like, if I see like young entrepreneurs such as yourself, they'll like maybe do 1 or 2 years of university. Maybe if they've started a business in high school, they'll just completely jump like straight from high school into their business. But did you sort of realize saying like, hey, I'm actually able to start a business. I have the capabilities to actually run a functioning business, to make money, being able to support myself. And even like $1 to $2 grand or $3 grand a month is still pretty good for, a college, like somebody who's 20 or 21 years old, right? So did you decide to like make that jump and just say, you know what, I'm just going to go all in on business and trying to create these businesses? Or did you actually decide to stick it out and get your degree or, diploma? Or
yeah, I've not finished my degree yet. And I love university though. I went to Brigham Young University and it's fantastic school. I seriously do. I really loved college. I learned a lot. I liked the business school. I loved it. And I was running these businesses during school. I did all the internships. I actually got really good grades. So I really liked school. I had like a 4.0. I loved it. It was awesome. And I went for about 2.5 years full time, about 2 years. And I got I did the internship thing. I went to a firm in Silicon Valley. I got a 6-figure offer. And at the same time, though, I was running these businesses, and they're starting to take off a little bit. And what I did is I just slowly started stepping out of classes. And so I was taking like 16 credits, and I took like 8 credits, and I took 6 credits, and I was taking like 3 credits. And then finally, we were having some big months, like we were taking home some pretty substantial money. And then what it was essentially opportunity cost. I looked at, hey, I could spend 10 hours at the business school working on a project for a fake business, and hopefully I'll get an A on it. Or I could spend 10 hours on my own business, and I bet I'll make like 5 or 10 or 15 grand, And so I was like, I'm going to do that. Right. And so I went for it. And the nice thing is about in your 20s too, if you fall on your face 4 times, no one cares at all. People are like, that's awesome. They'd rather a recruiter, if I want to go get a job, they'd rather see that I went out and tried to crush it, and maybe I failed and whatever, but I'm at least active, at least do stuff. I'm at least an A type of person that can go and, alpha go do something, versus someone that kind of slithers through college and slithers into a job. Most recruiters I see really, really like that. So I'm like, dude, I have asymmetrical risk here. I have a really high return for relatively low risk. If I lose it all, I only lost like $3 grand when I was in college. Like, if I lose it all, great. I lost $3 grand. Like, who cares? Like, let's just go. But I have the potential to make millions, right? So like, that's like high risk. Everyone's like high risk, high return. That's not true, right? It's high return, very low risk. And so I was like, let's just get into this. Let's do it. And that's what kind of changed it for me. So I haven't gone to school in 2 or 3 semesters now. And I actually do love school. School is amazing. If you're starting a business, start it at college. You have all these professors, all these resources that are for free. And they love students that start businesses. They love it. So I would go meet with professors like 3 times a week. Hey, like my marketing professor, what do you think of this marketing strategy? And I go, hey, finance professor, what do you think of my fund? And I milked the student card. When you're a student and you want to go get lunch with some successful entrepreneur, they always will take your lunch because everyone wants to help a student. The moment you graduate, you're just another bum on the street and no one's going to take your lunch. And so I really milked the student card for a long time. And it was awesome. But currently I'm not in school. I maybe will finish in the future if, I don't know, I want to, but I don't really need, I don't know. Anyways, that's where I'm at. So
yeah, no. And actually you dropped like tons of great advice there. Is actually like I talked to a lot of people, like I'm in the age group where a lot of my friends are at university, friends of friends are at university. And even when I was at Algonquin College, which is a local college in Ottawa, like a lot of people, like I was in a business management entrepreneurship course, and like a lot of people don't use the amount of resources that these schools have, like to the full potential. Oh, yeah. Like you were talking about, you can go to a marketing professor, somebody who's experienced, who spent 20 to 30 years, doing marketing or specializing in marketing, and here's my plan, and actually get it checked for your business, right? And they can help you with, like, all those people are mentors. And then also too is like, they can actually be maybe your first investors into your business because you're building great relationships with them.
Exactly.
So yeah, like that was something you're like, because usually a lot of people are like, oh, either, I'm against school or I'm for school, right? And it's sort of this black and white, but you actually said a really good point of like, be both, use both, right? Like start a business while you're at university, use the university to the full of your potential, and then you can reap both the rewards of, running your own business and being at a university. So now I want to jump to, actually starting like the basics of a fund. And I know you've covered it a bit in your videos, but just for sort of my viewers, like, can you break down, how you start a fund, with finding that first deal and then moving on from there?
Yeah, I'm going to go just simple here, and then we'll kind of get complex, but ask questions too. But some people don't even know what I'm talking about. Like, what is a fund, right? Like, what are you talking about, a fund? And when you hear words like private equity or venture capital or hedge funds or real estate funds or a REIT, or what is that? So a fund, and what's interesting too is all those things, they all run off of pretty much the same structure. They're all like the same. They're just different styles. But essentially what a fund is, all it is a pool of money that investors will put money into that pool. Okay, so there's a big pool of money. Investors put money in that pool, and us as fund managers get to draw from that pool of money, and we can go make investments into real estate, or we could go trade cryptocurrency, or we could go buy up a bunch of small businesses. And you'd be surprised about how many types of funds you could have out there. And once you deploy that fund and you invest, whenever the investment makes a return, you split that return with your investor. That's a fund in the most basic sense. So, traditional groups like hedge fund, that's typically a fund that trades public securities or just public things like a New York Stock Exchange, a cryptocurrency. Those are all publicly traded. They will trade public bonds, stock, commodities, options, stuff like that. Private equity trades private stuff. So they will go buy up private companies. A great example is Sycamore Partners. They own Nine West, like Nine West Shoes. They own Aeropostale. Last year, they were going to buy Victoria's Secret. So they will go and buy private companies, usually brands they buy up. They own Staples. Like that's the actual owner of Staples is Sycamore Partners. Like nobody knows that, right? These big private equity firms actually own a lot of the companies that you use every day. And then you have real estate funds. Obviously, it's the same fund pool, but they buy and sell real estate. So that's kind of what's going on in a fund. Now, for us, the huge benefit is you get to scale. A fund is like the coolest thing to scale. So, for instance, for a lot of people on here that like want to start a business, want to get a thing, I'm going to give you a few examples of small niche funds that actually are in our group. We have a private like mastermind group we have, and a couple guys that are starting funds. So one of them, they started a fund. They go and buy Amazon businesses. So, all these people that are doing the Amazon business, dropship, whatever it is, they say, hey, instead of just starting one, let's just go buy up a ton of them. So they started a fund, and they would go pitch these 22-year-olds like, hey, I'll buy your business for $40,000. And they're like, great. They're hyped, like, oh, I'm going to make 40 grand on exit. Like, this is sweet. And they're like, okay, awesome. They buy the business for 40 grand. They buy like 10 of those. So 400 grand, they buy 10 businesses. They bring them together under one roof. And then they scale those businesses up, and they'll sell them in about a year for about $2.5–3 million. And they take the spread, let's call it a $2 million spread, and they'll split that, with their investors, however they split it up, and they take home a big chunk of change. That's what you can do inside of a fund. It kind of hacks the whole system. Same thing with house flippers. We have a guy in our group, he's flipped a few houses. He flipped like 2 or 3 houses. And I was like, dude, you should start a fund. He just started a fund. They raised, I think, $5.5 million. This year, he's already started to flip 84 homes in 1 year. That's his plan. He's already started on it. So he's like, I'm planning to do 84 homes in 1 year because a fund allows you to scale. Another guy in our group, all he does is buys mom and pop funeral homes. So he has a fund. They go out and they buy up like just a local funeral home. They buy 10 or 15 of them. They found they can sell them for double on the public markets. So every year, so what he does, once a year, he buys up about 10 of these places, all for about $1 million a piece, about $10 million. He then goes and sells that little group of businesses for $20 million. He just made $10 million doing that, right? Like there are easy ways to make money and there's hard ways to make money. That's a pretty darn easy way to make money, right? That's what you can do inside of a fund. That's the beauty and magic and power of a fund. So that's on the basic level what a fund is. Sorry, back to your original question was it what was fun? What are funds or how to start one or what was it?
Yeah, no, that's amazing because you just covered if people don't know, you covered the beginning process of it. But people like maybe somebody's listening is like, so like how do you start? Like, do you raise the money first? Like, do you get the lawyer? Like, do you get the lawyer agreement? Like, what's sort of like the first step of starting this, right?
Yeah, great question. We have kind of mapped it out. We call it the fund launch formula. And I'll walk you guys through this. The 4-step formula to launch and scale a fund. Now, I'll tell you what traditional people will tell you about starting a fund. This is how the Ivy League, Harvard, Wall Street people, this is how they start funds. They call up a lawyer, and they pay a lawyer about $40,000 to build them their fund documents. And it's sometimes expensive to start a fund. They spend 40 grand. They then will go pitch investors and try to get some money in. And if they get money in, great, they can actually launch. If they don't get money in, they're stuck with a $40,000 legal bill. It's like, ooh, and lawyers are going to get paid, right? You got to pay, like they're going to sue you, right? So you got to pay lawyers. So that's kind of the traditional route. So you have to save the money. You got to put your own neck out there and do it. That's the traditional way to start funds. Now, with our group and community, and I have a podcast, I've been able to interview a lot of fund managers, and I only interview unconventional fund managers, guys that didn't go to Harvard, they didn't do the Wall Street route, people that were like me and you that just went out and started funds. And it was funny, I found a common theme with how all of them launched their fund. And I kind of put it together in what I call the fund launch formula. It's a 4-step formula. So step number 1 is don't go to the legal docs, don't go pitch investors. Step number 1 is find an incredible deal or investment thesis. And this is what I was asking my dad. I was really nervous when starting my first fund. I was like, I'm too young. I don't have a track record. I didn't go to Harvard, right? Like, who will invest in me? Who would believe in me? He goes, Bridger, I want to give you an example. And I think I shared this last night and with you guys he goes, Bridger, imagine we just found a Lamborghini Aventador for $50,000 in Billings, Montana. There's a lady that has it there and she needs to sell this Lamborghini for whatever reason. It's legit. It's all checked out. It's 100% legit. You can't lose money. Just go with me as an example here. It's $50,000 and it's for sale Saturday morning. Okay, we have to buy it on Saturday. Monday morning, we have a verified buyer in California that'll buy that car for $200,000. And he goes, just go with me as an example. I'm like, all right, I'm going with you. He goes, you can't use any of your own money. Could you find $50,000 by Saturday morning? And I kind of thought about it. I was like, it's all guaranteed. He goes, it's guaranteed. If you find 50 grand by Saturday, you'll make 150 grand this weekend by Monday morning. It's all guaranteed. Everything will work as long as you can raise 50 grand by Saturday. So I thought about it for a minute. I was like, former boss, and I'll ask you guys the same question. Could you raise 50 grand? I thought former boss, college professor, a friend, an aunt, uncle, a grandpa, somebody. And I thought yeah. I was like, you know what? 150 grand this weekend? You know what? Yeah, I could do that. I could raise 50 grand. It's all checked out. It's all checked out. And he goes, what about 100 grand? Let's say it was $100,000. You're going to make 100 grand this weekend. Could you raise 100 grand by Saturday morning? And I was like, you know what? Yeah, I could do it. I'll stay up late. I'll knock on doors. I'll fly somewhere. I don't care. I could do it for $100,000. I am doing it. And he goes, why? And I'm like, well, it's foolproof. The deal, it's all guaranteed. You said it was guaranteed. If I raise the money, I can do it. And I'm like, that's why I could do it. And he goes, aha, there it is. And I'm like, what do you mean? And he goes, you just said it. The deal was so good. And I'm like, what do you mean? He goes, 3 minutes ago, you were telling me I'm too young, I'm inexperienced, I don't have a track record, I don't have all this stuff. And all of a sudden, you're telling me you could raise $100,000 in 3 or 4 days. No problem. Because the deal was so good. Too often, people are trying to raise money or pitch people, but they don't believe in their deal enough. They don't believe in it like the $50,000 to $200,000 Lamborghini deal. And they have a heart and they don't scrape and go after it. He goes, step number 1 of any fund is find an incredible deal. Go out and what I mean by deal, it could be a Lamborghini, it could be a real estate deal, it could be a trading algorithm. It could be you're going to partner with somebody that's really good at trading Forex, right? Whatever that deal is, figure that out first, something that you're so confident in, you can go pitch investors. So that's step number 1 is find an incredible deal. Now, after you find the great deal, most people, their next impulse is, okay, let's go hire the lawyers. Let's get the lawyers going. It's time to let's pay some lawyers $40,000 and let's get the fund going. It's hold on. Before you go pitch, before you go get lawyers, step number 2 is frame the entire fund out. So step number 2 is frame. So what I do is I get an Excel spreadsheet, I frame out all the numbers, how investors are going to make money. I put together a pitch deck, put together all of our marketing materials. And then step number 3 is go and pitch investors. So step 1, you find the great deal. 2, frame it out, get your deck together, get your marketing materials. Step 3, go and pitch investors. Get in the room, start pitching investors. And you're probably like, wait, Bridger, I can't pitch investors. I don't have my legal docs done. I'm not legally set up to do that. And you go, well, you're fine. Go pitch investors. This is how my dad, they raised their first $100 million fund. They would go into an investor's office and they would say, hey, and this is how they would be showing up right as the Harvard guys would be leaving. The Harvard guys pitch like this. They go, hey, hi, Mrs. Johnson. We're very smart. We theorize in the next 18 months, we can go out and we're going to buy real estate and we can, do real estate projects. We're very smart and sophisticated. We're going to find these types of properties. And Mrs. Johnson goes, great. That's awesome. Thank you guys. My dad would walk in and his partner would say, hey, we're not from Harvard, but we just found a property in Miami, Florida. It's listed for $7.9 million. We appraised it at $15 million, almost half off. It's a distressed property. We think we can make a 4X return on it in 3 years. Here's the deal. And they'd show them the entire deal. Hey, our fund isn't set up yet, but we have to close by the end of the month. Have your real estate people come in. You can look at it, poke holes. You're smart. What do you think? And they would poke holes in it, whatever, and they couldn't find a problem. He goes, hey, we're putting together documents. If everything checks out, can we put you down for $500,000? And she'd say, yeah. If everything checks out, yeah, put me down for $500,000 as a soft commitment. So what you do is you get soft commitments from investors. And for my fund right now, we're doing this exact process. We have $15 million in soft commitments from investors right now. We have not done any of our legal docs. So now only at the stage of having a lot of soft committed capital, then and only then, you go and step number 4 is call a lawyer, set up your fund documents, pay the 30 grand. And the best part is the fund pays for the 30 grand. It's an expense of the fund. It's a reimbursable expense. So your investors are paying you to build the fund for them. That is like the fund launch program. I went through that quick, but that's kind of the lean way to launch a fund. So step 1, find incredible deals. 2, frame it out. 3, go and just start pitch investors. And guess what? If investors don't like it, go back to step 1. Maybe you got to tweak your deal. Maybe you got to tweak your offering a little bit and then go talk to those investors. Maybe you got to build out another team. Then and only then, once you have those investors lined up, then and only then, call a lawyer, set up your fund, and get it off the ground. That was a quick and dirty run through, but does that make sense?
No, that is absolutely amazing. And that is the best way somebody's at, like the quickest, and like simplicity is like amazing because it's so easy to understand. And it's such like, it's such a smart way of doing it, right? Because a lot of people get tied up with like, oh, they don't know, like, oh, do I raise the money first? Do I find the deal? Is the money more important? Is the deal more important? Getting the lawyer fees, like, how can I do it? You like laying out that process is so perfect. And I wanted to talk to you. So with that, like, do you guys over raise when you're getting your soft commitments, just in case, like, let's say for this one deal, let's say it's a $10 million deal, right? Do you over raise for that deal just so, no matter what it is, let's say it's for a business, real estate, or whatever, right? Do you guys over raise for that with soft commitments, just in case, when you actually go to the investors, they decide like, actually, no, I can't do it anymore, and they pull out?
Yes, great question. Yes, you always over raise. If the goal is to just do one deal, definitely over raise. And usually in a fund, your plan is to do multiple deals. So you usually, like the way I just talked about it, we'll have one deal that we anchor as like our first deal. But we say, hey, we're going to find 10 more that are just like this. So if it does, and we'll raise money in that first deal. And then soft commitments, usually 40% of it doesn't actually, people pull out, or maybe some people pull in more, but it's always good to have more money lined up because people are going to pull out last second or not work out. So that, we always over raise on it. But the idea though is, hey, we're putting money into the fund, which is going to buy this first deal, but also buy 10 or 20 deals in the future. So we need a lot more money.
So how does that work like that? Like, so let's say you raise like a $20 million fund and you buy a $10 million real estate, a 10 like two $10 million, then you have 2 buildings. How do you scale that up? Do you go back and raise money back into that fund? Or do you wait for like those buildings to sell and then, then you reinvest that money? Or like, how do you sort of work that to be able to continue scaling? Is it just do you keep bringing money into that same fund, or do you open a second fund, or how does that all sort of run?
Yeah, great question. You can do all the above. And that's the nice thing about funds is you get to decide. You can write, we call it, you write the Bible. So you get to decide all the rules of your fund. Most funds I see though, they will have a target raise. And typically the benefit of a fund is you don't have all your eggs in one property. You're not all invested. You're diversified across 11 properties or 15 or 100 properties. So 3 are going to go bad, but we hope that 20 of them go good and we're going to be just fine, right? So typically in a fund, you're doing more properties than just 2, but you can do 1, you could do 2, you could do 5. It's up to you. You could roll the money in. You could buy the first 2 properties and keep raising money. And then you kind of rebalance your fund as you grow. And then you start with one property and you just keep it in the fund. You grow into 100 properties. You could launch a new fund, right? You could just have 2 properties and launch an entire new fund. It's going to go buy 13 properties and you have those seasons. So it's up to you. And all of them, you can do any of them. It just really depends on what would make you the most money. What's smart for your investment thesis.
Oh, okay. Okay. Awesome. Awesome. Well, I know we're coming to the end here. I just have one last question. If you're good for time,
Yeah.
I don't know if you have to run. Are you good?
Yeah, I'm good to the top of the hour. So
Yeah. Yeah. Okay. Awesome. So my last question quickly is just, once you've gotten these funds off the ground, what were some memorable problems that you had with them that you had to overcome that, somebody who would be starting a fund would probably run into?
Man, good question. Memorable problems. There's like a lot of them. We've had times where, money was sent to the wrong person, like stuff like that. We've had times where setting up bank accounts is actually kind of hard for a fund. Some banks don't want to have funds with them, depending on the type of fund. So if you're doing like a crypto trading fund, sometimes banks will be like, I don't want. And I didn't know. I had no idea banks would turn down a fund. I'm like, why wouldn't you want our money? And so that was an interesting problem to face was setting up bank accounts. Actually, we help our students do that now, but I didn't know that at the beginning. Building out systems, and then the actual running a fund, the back end of it, audits, reporting, SEC compliance, that kind of stuff is annoying and complex, and it's kind of like dealing with the IRS and paying taxes. It's just kind of hyped up on a fund. It's a lot more. You got to file with the SEC or with state legislators or whoever it is, depending on your country and where you're at. There's usually a lot of regulation, and so it's okay. You can figure it out. It's not going to be, but just it's a memorable problem, I guess, if you're asking that question to have. And that's what we help teach people a lot, is how to navigate those types of problems in there. But I would say those are a few memorable ones.
Okay. Okay. Awesome. Awesome. Well, thank you again, man, for coming on the show. It's been amazing speaking with you. You dropped tons of great advice on this podcast. Where can people find out more about you and actually, your YouTube, your podcast, all that good stuff, and then actually your sort of like training company that you run?
Yeah. And well, Max, it's been awesome being on with you too. Thank you so much. Our stuff is called Investment Fund Secrets. So Investment Fund Secrets, we have a podcast called Investment Fund Secrets. investmentfundsecrets.com. I have a 1-hour free training that walks you through way more in depth about actually setting up a fund, structuring and running it. And then we have all sorts of programs and stuff. And you can, if you want to learn about those, you can just message me on Instagram or something. Bridger_Pennington is my Instagram. And that's where you can find me. So just Investment Fund Secrets. If you Google that or anywhere, you should be able to pull up our stuff and find, kind of get into our ecosystem and be a part of us. So we're kind of the only ones online that talk about scaling funds and doing this. I mean, we are the fund. So what we do is we eat, sleep, and drink funds. So if you're interested in getting in the fund space or even learning or wanting to work at a fund one day, like, we teach all of that. So that's what we do.
Awesome. Awesome. Well, thank you, Bridger, for coming on the show. It's been absolutely amazing.
Yeah. Thank you, Max. Have a good one.